Yeah. Hi guys, good evening to everyone. Yeah, my name is Satya Prasad and this is my short introduction. So, my name is Satya Prasad and I born and brought up in Nalgonda, which is in Telangana state, Hyderabad. And I have completed my graduate degree from Satyabama University, Chennai in computer science and engineering background. And my strengths are analytical skills and communication and leadership skills. And my hobbies are playing games and reading newspaper and reading books such as non-fiction books, mostly self-help and biographies. And my short-term goal is to get into the investment banking and put my theoretical knowledge into practical use by working in a firm, in a reputed firm. And my long-term goal is to build a career in the investment banking as a well reputed, and I want to mostly get into the investment banking. Yeah. And the reason that I chosen investment banking is actually, as a non-finance background, the main reason that I've chosen investment banking is actually it's because of my passion. So when I'm in the college, I use it to read a lot of news and use it to listen news about how the market is going on, everything. And I first I just to need to know what is happening. I just by curiosity I came across different institutions like Nifty 50 and those financial stock exchanges and this trading and everything. Later, when I dwell deeper into this field, I came across a lot of different kind of topics like fundamental analysis and who are the market participants, how the market is going to work, and what are the key market instruments like stocks and equities, and what are the some of the futures of those things. And I felt like this is the area where I would like to excel because in finance it is more the knowledge is more of static thing, and the the evolution is more of doing and learning those things. And also communication and meeting clients and building trust is one of the most important skill of mine, and also in this financial field. And also I will get well paid by doing the work that I like, and so I can enjoy my life also. So that is the reason that I took investment banking. And later I came across these programs by Marcus Learning, and I thought that until now I don't have experience in investment banking because as I'm not from a finance background. So to get into the investment banking, I should take a course. So I came across this EBOB, and it has made me it has providing this placement. So that's why I came to this course. And coming to this topic, today I'm going to tell about financial markets. So first of all, I need to give what is a basic understanding what is a financial system is. So financial system is nothing but a centralized location where both buyers and sellers can meet at the same place and can trade their assets such as stocks and bonds at a price that they determine, and the price will be determined on the supply and demand dynamics. Like let's say there is a stock, so it has more demand than the supply. Like there is only 100 shares, but a lot of people want it. Then the price will be higher. That's how the price will be traded. And some of the exchanges are NSE, BSE. And next, what are the some of the major functions of financial system? The the most important function is price discovery. These are the most important things, and the first one is price discovery. What price discovery is mean by no whenever we go to the market, as more and more traders come and trade their assets, we will get to know that the fair market price of the asset. Like we can able to predict. Let's say we hold a share of a company, and whenever we hold a share now and we want to know the price. Actually we bought a share previously, and now we want to know the price. So by simply looking into the stock exchange, by knowing the ticker symbol in Google, we can able to know the exact share price of our asset, and we can easily sell our shares at that specific price. That is the main role of price discovery. And the second is funds mobilization. In funds mobilization, how financial system helps, what fund mobilization is meeting bridging the gap between people who have savings and people who want to who need the money, like deficit players. By bridging those gap, the financial system helps from the saver side to earn a return, and from the borrower side to finance their capital projects, like expanding a new plant, or refinancing their debts, or going and acquiring a new company. Those kind of things can be achieved by the company. And the third is market efficiency. Market efficiency means getting to know our trade market prices by all the relevant information available at the price. So what this says is, the price of the security will be determined at that time by all the information available in the market. By getting like this, we can able to easily reflect the prices of those assets by market conditions. That is what market efficiency is all about. And the next is liquidity. Liquidity is nothing but liquidity is selling our shares at at fair market price without any decrease in the market price. Like, let's say if you buy a real estate property or a building, like if the property value is, let's say, 50 lakhs. So if you want to sell that property in the market, immediately you will not get 50 lakhs, right? You need to wait at least 1 year to totally liquidate that 50 lakhs amount. So if you want to do it at a fire sale, like immediately, you will get only 30-40 lakhs. That much amount you will get. So that is not what liquidity is. Liquidity means we can able to easily convert our asset into the cash at its fair market price. Like, if you want to give me the liquid asset example, let's take, there is a company stock. We can able to know the prices in the market by simply knowing the what is the trading price today, and we can able to sell at the same market price without knowing, without able to any depreciation to our prices. The next thing is risk management. Risk management is all about managing risk between managing risk. Let's say there is a farmer. Let's say there is a in risk management. Let's say we have market risk. Market risk is nothing but price fluctuations of in the market. Let's take, there is a farmer who has planted a specific crop, and he want to, but he does not know what the prices will be, and he is very bearish that prices might decrease. So what we do is, he will get into agreement with the trader by getting into derivative contract like futures, or forwards, by by setting the price today for the future tradable asset. And the next is formation of capital. And here, the capital is invested with the help of knowing all the information in the market. The capital can be invested into asset producing, like a very good use of the capital. And the last one is intermediation. And in the intermediation, what we do is, the financial institution can able to make the flow of funds from the savers to the borrowers easily by lending, or by lending, and by providing them loans. Those kind of things can be easily achieved in this financial system. And there are, in financial system, there are two types of financial system. One is capital markets, and the second is money market. Next is money markets. In capital markets, long term capital is raised. Long term capital means capital which has maturity more than 1 year. 1 year is called as long term capital. And the securities are issued by corporates, governments, or financial institutions. And the capital here mostly used to fund some kind of capital expansion or asset building. Those kind of things only uh, used by raising this capital. Here the company issues stocks and bonds. Stock, when they issue stocks, the ownership of the company will be liquidated, and it helps in raising those things. In capital markets, there are two type of markets. One is primary market, and the second is secondary market. In primary market, it is also known as new issue market. In primary market, all the new securities are issued, are sold by the company the first time in the market. So here the company issues new kind of securities to the investors with the hope that the company wants to use that capital for expanding some new business, those kind of things. How this is going to help is, the companies will get the capital to fund their projects, and the investor can able to invest in the project and can earn a return in the future by selling at higher price or getting dividends. And in IPO, there are two types. One is fixed, and second one is book building. In fixed pricing, the company will decide the price, and in book building, the company will say, based on the demand and supply in the market, we will decide our share market price. And one of the example is Zomato IPO of Zomato. Here the Zomato company, which is a food delivery and food aggregator company, wants to raise capital to expand their business. They have gone to capital markets by issuing new shares to the public, and they have raised the money, and they're using that money to fund those projects. And the second one is secondary market. In secondary market, it is also called as investor market, because the both buyers and the sellers are already investors, are investors, like they trade the securities which are issued in the primary markets to other investors to get out of the position, and to realize their returns. Those are secondary markets. And the next one is money markets. In money markets, it is short term funds which is less than 1 year kind of maturity. And mostly the purpose of raising money market or short term funds is to finance short term working capital needs, like let's say their assets are non liquid, and they want those finance to get in. Let's say there is a company called as XYZ company, which has supplied footwear to Reliance, and the Reliance is not going to pay them money immediately by purchasing. So they will said that we will Reliance will say to the supplier that we will pay you after 45 days. But until this 45 days, the owner or the that XYZ company will not get the funds, right? They need to go on through the business. They need to pay their bills, right? So what they do is they will use this money market by issuing commercial paper, those things, and they will just sell the invoice to the bank and raise the capital at a discounted price, and they use these funds to expand more business and do more business with lot of other clients. And here some of the examples are treasury bills. These treasury bills are issued by government, which is less than 1 year maturity. And the future of this treasury bills is it is issued at a zero discount rate. And the next one is commercial paper, those things. And now we are getting to the second topic. It is financial market participants. And in financial market participants, so in financial market participants, one of the most important one is exchanges. Exchange is a place where both buyers and sellers meet to trade financial assets, such as publicly listed stocks and everything. And one of the most important reputed exchanges are NSE, BSE. Yeah. And the second one is clearing corporation. In clearing corporation, it is a firm that facilitates smooth transaction, like it acts as a buyer to the seller. And let's say you and me got into agreement that we are going to trade an asset, like a stock of Apple. But here we made the agreement, but the settlement process, like how many quantity of Apple shares you are going to trade, those things happen in clearinghouse. And the clearinghouse acts as an intermediary, and it acts as a seller to me, like I should pay the money, and it acts as a buyer from the other end, like they will get the securities first. Those things will be happen in clearinghouse. And the second one is custodian bank. A custodian bank is a specialized institution where it holds the custody of the client's assets, such as commodity stocks and everything. And some of the functions are corporate trade settlement, this securities lending. And the last one is central securities depositories. It is just a like a government organization, like a specialized kind of organization, which stores the assets, like financial instruments, stocks and bonds, in electronic form or dematerialized form. The use of this is actually there are a lot of investors and lot of securities in the market, and earlier it is used to be in the paper form. When it is in the paper form, it is very hard to as an investor, if I want to buy shares, I will get 1,000 bundle of those stocks with me. So it is very hard, right? So I need to move those paper into store those assets, and if I lost the paper value, the value is worthless, right? Like a just a like a money currency, like a 100 rupees note. So to solve this issue, what they have done is they have totally converted this paper securities into electronic form, like demat account, so that it can be dematerialized and it can be easily transferred, like easily traded between different participants. And the last one is like regulators. So they are like a government organization that oversee these markets, like capital markets. and their whole goal is to provide integrity and efficiency. Integrity means by protecting the investor interest, like let's say there is a company which has issued so they will just protect the investors, and they will enforce security laws and make the marketplace fair and efficient. Like let's say there is a trader like who has insider information, so because he has insider information, he can make lot of profits in the market by trading those securities before information in the public. So what happens is people, when they came to know that this person has insider information, the people, other participants in the market will lose the trust in the market, because whatever we do, we will not get the price because the insider people will trade by these things. So the trust will be gone in the financial system. Like if the trust is gone, no one will invest in the financial system. There will be a lot of loss to them. So to solve this issue, the financial regulator will set certain kind of laws, security laws, and they will enforce that whenever someone has breached those laws, they will enforce those laws. Yeah, that's all, guys. And any questions? Hello, Atik and Mahesh.
Yeah,
Yeah, any questions you want to raise?
yes. Give me any examples for regulators other
Yeah,
than in India. Give me any examples for regulators.
yeah. In USA, the regulator of the securities market is SEBI, and actually there are two types of markets, right? Money market and capital markets. In USA, the securities market or capital markets are regulated by SEBI, and the money markets by US Fed. And those are some of the examples. Yeah. And from Mahesh question, it is functions of capital markets. So the main function of capital markets is to raise raise long term capital by issuing shares. And the second one is capital formation. In capital formation, what we do is we will finance. Let's say there is a company which want to set up a green power plant or something solar project. So to fund those projects, the company needs money, right? So as a investors, we can able to fund those assets by utilizing the funds to finance those assets. We are helping for productive use of assets. So those are some of the functions of capital markets. And also this is going to create wealth for the nation and investors also. Yeah. Yeah, any other questions?
Yeah, thank you. You were clear.
Yeah, yeah. Okay, guys.